The Federal Reserve has kept it no secret that they intend to keep raising interest rates through the end of the year. And this comes at the same time that housing prices are hitting all-time highs, and many real estate investors feel like we're in some sort of bubble. I was talking to a real estate investor just last week, and he said that he's certainly not taking on any new real estate investments and trying to scale back the exposure to real estate that he has, because he feels like the rising interest rates are ultimately going to drive housing prices down. So I wanted to take a look at some data here and see what the data shows on the relationship between interest rates and housing prices. And I found a couple cool charts, which I'll share with you guys right here. The first one shows the housing index, and this is the Shiller Home Price Index that they're using here, versus interest rates. Interest rates being the red line, home price index being the green line. What I really want to point out and what really stands out to me is the period here from about 1922 to 1942. At this time, interest rates were declining pretty much consistently, but at the same time, housing prices were staying about the same, if not going down a little bit during this period of time. So while the interest rates were declining, so were home prices. Now, this period here from, say, post-World War II to the early 80s is also interesting because interest rates are sharply rising. And at the same time interest rates are rising, so are home prices. So they're kind of moving, step in step with each other. In fact, there's not an inverse relationship among them. What this is showing is that there's actually a slight positive relationship. I mean, of course, here we do have the 2000s where interest rates are declining and then home prices are increasing. So to look at this in better detail, the author of this graph on Seeking Alpha actually put it into a scatter plot, which is really cool. And that shows the change in housing prices versus the change in rates, okay, on an annual basis. So we have the change in housing price annually, the change annually. On the x-axis, y-axis is going to be the change in interest rates here. What we can see with this little line here showing the slope of the data, and granted this, I wouldn't say this is statistically significant, but it's just interesting to look at. The big thing here is that there's ultimately very little relationship between the two of them. But what we can see here is that as housing prices are going up, so are interest rates. Housing prices are going up with interest rates, right? So when there's a high change in house price, the interest rate is likely to have gone up at the same time. If housing prices were likely to go up when interest rates decline, we would see the data sloping this way, right? So there's going to be a high change in housing price, positive, in response to a negative change in interest rate. So I thought this was really interesting, and what the data actually shows here is that interest rates and housing prices kind of move hand in hand. They kind of move at tandem. Why is this the case? Because obviously interest rates inflate the amount, or don't inflate, but increase the payments, your debt payments to hold mortgages on real estate. Possibly that's because we're raising interest rates at a time when the economy is strong. And I think that is what the Federal Reserve wants to do. So ultimately, though, on this data, we can summarize it here, and I think Robert Shiller himself summarized it best. I'm going to read a quote from him on my other monitor. "There is not a tight fit at all between the two. High mortgage rates do not translate automatically into low home prices." And that's what we can see. This home price index, again, is based on Robert Shiller's data. Just kind of a side note, what drives home prices? Well, I think it's basic market factors, supply and demand. That is ultimately what drives everything. I could go into a whole deep wormhole on supply and demand and pricing theory, and I love that stuff because I'm a business owner, and people always ask well, how do you know what to price at, or what should I price at? And I'm like, supply and demand. Anyways, I'm starting that wormhole. I'm not going to go down it, but I think demographics make a bigger impact or a bigger difference on home prices than interest rates. I think that is the bottom line here. Now we've got Generation Z, but that's younger than me a little bit. We have millennials. I think we are possibly the largest demographic that's still living, moving into larger homes. We're in our 30s now. How old am I? I'm 32. And I know a lot of my friends are having kids, moving into bigger and bigger homes. and the house is more valuable to them. So that demographic shift, I think, is driving up housing prices, along with the fact that the pandemic made a lot of people realize, hey, we can basically live wherever and do the same work remotely. So let's shift. Ultimately, personally, as an investor, I would look more at those factors than I would at the interest rates. I think, as we can see here from the interest rates, just the interest rates alone really don't have any impact at all on house prices. So on that note, guys, let me ask you, what do you think about all this? Are there any details that you know of that you feel like I missed on this relationship between housing prices and interest rates? Let me know in the comments below.